+2 in the oscillator. But Jeff, this is a huge week. Microsoft, as I wrote this weekend, Tuesday, Meta Wednesday, Apple, Amazon Thursday, and these are going to be impactful situations.
Yeah, impactful to I'll say the larger part of the market for so many reasons, because it's their earnings, it's also their CapEx figures, has downstream impacts to the rest of the economy. So there's 14 names in the portfolio reporting. Those were just 4 of them. So it's a very big week.
Right. Now, the problem as I see it is that these are heads, I win, tails, you lose. In other words, that if, let's say Amazon decides to continue to spend, we know that Alphabet continued to spend. Alphabet's reasoning was very bad. Alphabet just said, hey, the other guys are spending, we have to spend. It would have been far better, excuse me, for Amazon to say, listen, we have to spend because we have this much demand. And if we do this, the ROI is going to be exactly what Jensen said. Jensen Huang, CEO of NVIDIA, has been saying the ROI is so great.
Yeah.
But Amazon it may have that ready because Alphabet didn't.
Yeah, and we've seen a little bit of it, right? Like Microsoft has partnered up with Oracle to almost kind of borrow their cloud, so to speak, because they're seeing a lot of strong demand with Azure. So, yeah, we'll see. I mean, we have some semis reporting as well. AMD's Tuesday night. So there's
but AMD, unfortunately, is very linked to Taiwan, like NVIDIA. And the problem with Taiwan is that former President Trump, as opposed to Gina Raimondo, Commerce Secretary, former President Trump basically says, listen, they took our jobs. Secretary Gina Raimondo does not believe that. She says it was our companies that shipped them over there. Very nuanced difference.
And maybe if we could pull back to Apple, only because there was a story from Bloomberg this morning that said their AI features may miss the launch of its upcoming iPhone and iPad software update. Shares not really.
Yeah, I mean, I thought this was a bad story. I'll tell you why.
Yeah.
Anything that elongates the cycle is positive. We don't want all of the 16 to have everything. I mean, we do want to know what can be downloaded, but I just think this stock is about a situation where they don't have to pay for AI. Others want to give them the AI. That's why they're the big winner. If they talk about that, the stock goes higher, and they do not talk against themselves. Now, we took action this morning. For instance, let's start with Danaher. We decided we had to take little profits. That was our agreement before. We said we take it around 275. I think we did hurt the stock.
Yeah, we indicated we'd make the sale last Friday. Hopefully everyone made that trade and got a higher price than what we did. That's always our hope. But the stock's had a huge move. It rallied more than 12% last week. You had better earnings. I think it benefited from the rotation as well. And their bioprocessing business on track for the recovery, leading to high single-digit growth kind of as we exit through the year. So it's because it made such a big move, it became such a large part of the position. So you have to right-size things as well.
Well, we also battled it
in this market.
We battled it. We bought down here.
Totally.
We have to sell some of what we bought because we bought a ton when it was dramatically lower. And we just have to clear the decks a little bit. It's too big a position.
And Salesforce, it recovered nearly all of its losses. Remember, it fell 19% after earnings last quarter.
Yeah, I mean, look at this.
Recovered nearly all of those gains.
Totally just a collapse. We get out at, okay, do we get this price? No, but we still have more left. We have a lot left. It's just important to be able to make it so that if it disappoints, and there's a very good chance it will, we are in good shape.
And then Disney, down significantly from all their sales in April, bought back $50, 50 shares at 98, did another 50 today. Box office coming back. Inside Out 2 is a success. Deadpool and Wolverine had a great week.
Sorry. All right, guys, thank you. Just want to talk about some of the trade that the investment club made earlier on this morning. The guys on my Patreon, you will have got that before the stock market open, guys. And if you want to get this in real time, please join me on Patreon, or you could do channel membership, and that's a way that you could support us if you like what you're doing and you want to see more videos like that. Just wanted to talk a little bit about Disney. Disney was a stock that the club bought couple years back. The stock been struggling. It has been doing nothing. I myself had some Disney, got out of Disney. Not to agree with Cramer in the battling. I don't think you have to battle too much. If a stock is not working, I think it's not working. There is so much other high quality companies that you can put your money into. I'm going to talk a little bit about ETFs later on, but I just want us to go back to the club meeting, guys, so you guys could get a juice of what we were saying. So let's go back and hear what Cramer has to say. This meeting was like 10 minutes long, so I'm trying to give you all the information and tell you exactly what I'm doing. I said before, I had Disney, but I sell all my shares. So I just want to let you guys know that I don't believe in buying Disney anymore. I don't believe in the battle that Cramer is battling and buying some here and buying some there. Don't believe in it. But let me go back to Jim Cramer.
Weekend at the box office.
We've kind of forgot who they are. And that's because they forgot who they were, which is to make blockbusters and then have the virtuous circle of putting some of the characters elsewhere. The company's been so poorly run, it's really just shocking. Okay. And it's shocking because this is a great franchise that's being where people have to kind of really think about, well, what are we doing here? And I think that it's very disappointing. But Nelson Peltz got us to here. We sold the stock that we bought back here. And that's what you do.
Yeah, a fraction of that. Yeah.
We battled this. Now we lowered our basis and we are in better shape than we were before this started.
So now it's 100 shares of the 490 we sold. I don't think we need to buy the whole 490 back. But down here, getting a
right.
pretty
I mean, if it goes down more, like, geez, you have to buy it because I think they're going to have good quarters.
And then last Monday, we upgraded Starbucks to a 1. This was after news that Elliott Management has a stake in the company.
Yes.
Finally was able to buy some shares today. Also looked at McDonald's, the reaction to their earnings miss on revs, earnings, same-store sales, but it's nicely higher today.
Right. I mean, that's a good example of what could happen here. I mean, look, don't forget Starbucks. No one wants to feel the heat of Elliott. They try to do better. Elliott, by the way, is on the board of Constellation Brands.
Yes.
Constellation Brands is down horribly because of what's happening in China and Europe on beer, but they don't have any exposure there.
Right. Should point out as well, they're going to report Starbucks Tuesday night. We're not making a call ahead of the quarter. Leave some room to buy before, some after. But then, of course, too, if we do see continued weakness from Starbucks, expect Elliott to push harder and harder for changes.
This could be a win-win for us, okay? We haven't bought any. It's been really disappointing. You know, I think that Luxman or Simmons not doing a good job. That's okay. I mean, one of the things that you do, if we were talking about a manager in baseball and the team was underachieving, we would say he's not doing a good job. We would never say, oh, he's doing a good job. And then go off camera, say, wow, he's not doing well. We call it like we see it. And that's what's happening there. Now let's talk about one that is a disaster. And yet the disaster price is not yet priced in. Maybe it won't be, which is Abbott. They had a terrible decision reached on Friday against them on this NEC. Remember, they make $9 million on this product, which is just pathetic. It's a product that the American Association of Pediatricians wants them to do. The FDA hasn't banned it. The FDA wants it. And yet suddenly the plaintiff's bar has discovered it as being a honeypot. And they really crushed the stock in the St. Louis verdict.
Yeah, ordered to pay nearly $495 million. $400 million was in punitive damages.
Which is insane.
Yeah, and this is failure to warn of risk. We've said before, we hated the venue.
We told you they'd
lose.
The
case is strong.
We knew they'd lose. We knew that when they talked about the NEC at the top of the call, they were trying to prize everyone. It's too bad because they're taking share in the glucose monitor.
Yeah.
It doesn't matter. What's happened here is that they will appeal. I think they'll get rid of the punitive. I don't know if they'll get rid of the compensatory.
Yeah. BTIG says they're stunned by the magnitude of the jury award. That was the punitive. Wells says ultimately settlement is still very manageable. So there's still the idea here that what they could ultimately pay to settle is much less than the market cap that has been.
And it was also outrageous. They were debated it for a couple of hours, for heaven's sake.
Yeah.
And then they came up with these numbers. I mean, why don't they come up with $1 billion? I mean, it was just pathetic.
I mean, do you think it's possible? Could they?
I feel terrible about the plaintiff, obviously.
Of course. But could they pull the product? It could create a public health risk. That's what Robert Ford said last
because they can't lose. We know that everyone says, look, they now owe big. So if they owe big and they just write checks, they got to get rid of it or else they owe big for many years. They can't afford to produce it.
Still a different situation from J&J, Talc?
Yes, because it's not that many and because the doctors are in favor of it. And Talc was a consumer product, but obviously the verdict was worse here than any of Talc, which is really.
I mean, you had the Wall Street editorial board, what was it, last week, say, almost the government needs to step in and stop these cases because of the public health risk.
No, that was
a very good products.
Piece. I really believe that's a very good piece.
Yeah.
All right, guys. I just want to touch back with you a little bit, guys, and says Me personally would not touch Abbott Labs. I think AbbVie, which is the sister company, is a better deal right now. You have all that stuff going on. There's a lot of companies. I will choose Starbucks, as I said, guys. As you know, Starbucks is reporting tomorrow. We have Procter and Gamble reporting before the bell tomorrow. So, guys, if you're in my Patreon, you'll have got a list of all the companies that are reporting this week, guys. But Starbucks is definitely a good buy. And if you're just starting to invest, please think about doing ETFs, S&P 500. And there's a lot of great companies. This company is facing a lawsuit right now. And although Cramer is buying it, they bought it earlier. I stayed away from it. But this Cramer saying that 95, he would buy it. Anyway, guys, if you like this video, guys, please consider joining our membership. Consider checking me out on Patreon. We have a free 7-day free trial, guys. And I'll see you tomorrow evening. And if you want this in real time, we put up the video in real time on Patreon. Anyway, guys, thanks for watching the video. And thank you for subscribing. Thank you for watching. I'll see you tomorrow afternoon when I give you more videos.